Is it time for Tesla to do a stock buyback? There is a company that was the size of Tesla back in 2013 that we're going to explore in this video. And when they did a stock buyback and when they did multiple stock buybacks over the preceding 7 to 8 years, they were rewarded handsomely by shareholders. Because when a company does a stock buyback, they're essentially getting rid of the outstanding shares that exist in a company. So if you have 1,000 outstanding shares and a company buys back 10% of them, so gets rid of 100 of them, that means you as a shareholder theoretically own 10% more of your stake of the company because there's less of the pie. So now the stake that you had increases because the overall pie decreases, and whatever stake you had of that pie has to increase because the overall pie is decreasing. And the best way to do this is if the company takes their own money, their own cash that they have in the bank, and they buy back their shares. Now, why would a company buy back their shares? Well, the number one reason is they think it's undervalued. They think that their shares are not being respected by the market due to a variety of different reasons, many of those likely macroeconomic. And as a result of that, it presents a buying opportunity, just like it presents a buying opportunity for retail and institutional investors to buy the dip. It might be the same thing for a company. We're going to look at this tweet thread here from @FawnsDK. This was a really good tweet thread that gave an example of Apple and what happened in 2013. In October 2013, Carl Icahn, who's an activist investor, wrote an infamous letter to Apple CEO Tim Cook requesting an immediate stock buyback. Since then, Apple has bought back hundreds of billions of dollars of stock. Yesterday, the third largest individual Tesla shareholder, Kogwan Leo, I'm sorry if I'm saying that wrong, requested that Tesla's board of directors do the same. So Carl Icahn, as we can see in this picture, requested in 2013 that when Apple had a $500 billion market cap and they had $35 billion of revenue, $6.9 billion of net income, and $42.6 billion of cash in the bank, to do a stock buyback. Leo Kogwan, who is now one of the largest shareholders of Tesla, is also requesting for a buyback when Tesla has a market cap of $550 billion. They have a revenue of $21.5 billion, net income of $3.3 billion, and cash of $21.1 billion. Not exactly at the same level of Apple back in 2013, but one could make the argument that Apple, has since now Apple's a $2.5 trillion company from $500 billion, and their growth potential with the AirPods, iPhone, iWatch, like they had everything in them and they executed. One could say Tesla could be much, 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 much bigger than them if they are able to execute on their mission. He goes into the thread and says, Icahn wrote in the letter, "It is our belief that a company's board has a responsibility to recognize opportunities to increase shareholder value, which includes allocating capital to execute large and well-timed buybacks. The return on Apple bought stock that they bought back in 2013 has been 700%. So in 2013, they bought 1.3 billion shares at an average price of $17.45. In 2014, they bought about 1.9 billion shares for an average price of $23. 2015, 1.3 billion, average price 27. 2016, 1.18 billion, average price 25. So as you can see, from 2013 to 2016, for those 3 years, the stock was relatively flat, going from $17 to $25, and that is when the opportunity emerged. Apple purchased 45 plus 36 plus 29 plus 22, round about a little bit over $100 billion worth of their own stock. And that has returned them 700%. So like literally buying back their own company because their company performed well has been profitable for them, because the average share price today is $141, which is about a 7x return from those prices. Now, the most important aspect of a stock buyback is reducing shares outstanding, which boosts the earnings per share. Earnings per share is one of those metrics that doesn't really get that much love. People don't care about it that much. Analysts make a big deal out of it on Wall Street, but it doesn't relatively matter. However, in terms of dilution, it does. So if you decrease the level of outstanding shares you have and you have your earnings come in, your earnings per share has to go up because you have less amount of shares, which makes your obviously stock price and earnings look a lot better to analysts as they're trying to evaluate if they should buy the company. And remember, the stock price is completely based on if analysts feel that they should buy the company, if the market feels that there is value here. And if you have less shares and more dollars per share in earnings to show because you bought back the outstanding shares, then the market has a higher sentiment to you, and you're more likely to see them buy your stock. So Apple's shares outstanding are down 40%, but their net EPS fully diluted is up 330% in terms of their earnings per share. And 2013 is when Carl Icahn wrote a letter to Tim Cook requesting a stock buyback. Now, Gary Black, who's the head of the Future Fund, and Tesla is one of their largest portfolios, also on October 13th, which is really interesting because in October 2013, you had Carl Icahn talk to Apple, and Gary Black sent this letter in October 2013. or October 13th, basically saying that it's time for Tesla to do a buyback of $10 billion. He writes, our view is that Tesla is now operating from a position of outstanding financial strength, with $18.9 billion in cash and marketable securities and virtually no debt per your most recent 10Q. And with our expectations of up to $20 billion in free cash flow after all capital expenditures in 2023, we believe now is a unique opportunity to buy your stock at well below our estimate of $550 a share of intrinsic value. You got some people that don't think Tesla should be worth more than Toyota, which would mean Tesla is worth about $85 a share. Right now it's at $178. Then you've got other people like Gary Black saying it's a $550 stock right now, and that means the opportunity, as it's cut more than 3 times that, is a reason for them to buy back. He writes, at October 13, 2022, closing price of $221.72, assuming 2030 non-GAAP earnings of $42.30 times price to earnings, we calculate an annualized internal rate of return of 24%, well above Tesla's after-tax return on cash or new debt. Even our 2023 non-GAAP earnings of $8 per share, buying back Tesla shares offers a 3.6% earnings yield, which is higher than Tesla's after-tax return on cash in the first year. He also says buybacks give management high flexibility to turn on and off opportunistically with short-term noises depressing shares, and is happening now. Tesla management can buy back more shares. Obviously, that short-term noise are interest rate hikes and the macro. When the price rises, we would expect Tesla to buy back fewer shares. For example, Apple, Google, and Microsoft have employed this consistent buyback strategy for the years. In the year ending June 30th, 2022, Apple, Google, and Microsoft bought back 3.8%, 3.3%, and 1.5% of their outstanding shares, respectively. Now, here's the interesting thing. He says, over the next 3 years, we estimate Tesla will generate $100 billion in free cash flow after all operating investments. A $10 billion buyback over 3 years, which is a 1.7% of the float, would have almost no impact on financial flexibility and send a powerful signal that the board takes seriously its role of driving shareholder value. Remember, Tesla has about Tesla has how much in cash? Tesla has right now in cash, they did $21 billion in revenue, and in cash they have, they did $21 billion in revenue, and they $21.5 billion in revenue up till September 2022, and they have $21.1 billion in cash. So if they spent $10 billion, it wouldn't really hurt their financial situation because it's only half the cash they have. They could still, do all the other things they have to do with capital expenditures. Remember, Tesla has no debt, whereas a company like Toyota has about $200 billion in debt. So that's why Gary Black is saying this is actually going to be a really good idea. He says, many erroneously believe that buying back shares impedes a company's ability to grow. This view is nonsensical since share buybacks only come after all internal operating projects are funded. One must view buybacks against other financing options, retiring debt, acquisitions, dividends, or building up cash. And because they believe that Tesla stock is undervalued and it has more room to grow, that's why they're saying a buyback should happen. This is an interesting proposition. Now, obviously, I don't think Elon Musk necessarily wants to do a buyback because he probably just wants to operate the company and keep rolling. Some may argue that, when you do a buyback at that point, you don't have anything better to do with your money. And probably Elon Musk is like, there's a trillion things we could do with our money right now because there's a lot of stuff we have to do. But in the context of driving shareholder value and giving shareholders something to be happy about, in particular, when Elon Musk has bought a social media company for $44 billion that he probably didn't need to buy, that's likely having a negative effect on the stock only because of the fact that he's not as motivated on just Tesla. Now he's motivated on fixing free speech in America and throughout the world. That could be something positive for shareholders in a world in which 2023 is going to be a very weird and probably not favorable macro environment. To do something for your shareholders that says, hey, we value you. We value your opportunity cost of your capital. Instead of going to bonds or to Apple, it's going to Tesla. Here's us decreasing our float so that you have a little bit more ownership in our company. And thank you. And just give us more time to execute. And thank you for handling my eccentricities like buying Twitter. I think it would send a pretty strong message. Obviously, a lot of shareholders will be happy. The question is if Elon Musk is actually willing to do that. Let me know your thoughts and comments. Do you think Elon Musk should initiate a buyback? Do you think it makes sense financially for Tesla to do it? We'd love to know your thoughts. Thanks so much for listening and watching. I'll see you in the next one.